8 billion rand has been lost in direct sales revenue due to the alcohol sales ban, and that's just from the wine industry. This is according to non-profit company Vinpro that represents wine producers and cellars. The alcohol industry now wants excise taxes to be deferred until the booze ban is lifted. Vinpro's managing director Rico Basson joins us now. Good morning to you, Rico. First of all, it is no secret, that the alcohol industry has been deeply affected by the banning of sales. Just if you could paint a picture for us, how much is spent on excise tax and why would it be simply impossible to meet it right now?
Look, it's a significant number. Good morning. I think the reason for why we need the deferment is purely from a cash flow perspective. In the case of spirits, that excise is calculated at the source of manufacturing. And you can think if you can't sell, it's very difficult to pay that excise. And that's the reason for that. We've been lucky that in 2020, government has granted that. But cash flow is very much challenging at the moment, and we are in a dire position.
You mentioned that the deferment was granted last year, back in 2020. This was when the sales were banned with immediate effect. Has the payments now been honoured?
The payments absolutely has been honoured. I think this is the third time that we asked for deferment. I think that makes it difficult. It's the third ban. The previous one has been long. It's 14 weeks. This one has now been in week 3, going for week 4. And it's really challenging. And I think the biggest issue for our businesses and wineries is this ban is open-ended. It's uncertain. We're not sure when it will expire, when the ban will be lifted. And it makes planning extremely difficult. And
it's more than just the damage to the fiscus. I mean, there are socioeconomic repercussions as well. I mean, a lot of the employees, there is no employment relief schemes for the industry.
Well, there's limited support, unfortunately, in terms of TERS, in terms of other mitigating factors, which means if you think about the wine industry where you have a number of very small businesses, it is extremely difficult for them to survive. And we've seen a number of closures already. We've seen the wine tourism sector, which is a 7 billion rand sector, down to about 50%, economically down with 3,000 jobs. So what we face now is a huge structural impact on the wine sector, which contributes about 60 billion rand. And it's very difficult that this industry will overnight be able to trade out of this disaster.
Yeah, and Rico, how do then the illegal sales, the black market sales, how do they then end up affecting the industry?
Well, prior to the ban, the WHO already determined that 1 in every 4 litres in South Africa is sold illegally. And you can just think where we are, once you close the regulated channel, that figure just goes up. And I think that's the frustration or the plea for the industry. Once you close the regulated channel, which is well licensed, well policed, that illicit channel just goes. And I think the worry is that people are brewing toxic beverages for themselves, and we've seen that casualties as well. So I think our industry plea is merely for a balanced approach to say, well, let's look at other mitigating factors. Let's police them well. Let's keep the curfew and look at off-consumption channels within limited hours. And history has shown us all over the world that a blanket approach is not the answer for this.
Yeah, and this is the time of the year where the SA harvest, South African harvest, is beginning. So this does paint a rather bleak picture, doesn't it?
Well, for the wine sector, who is slightly different than other alcohol beverages, we are agricultural related. We only harvest once a year. That harvest now starts next week for the next 10 weeks. And the challenge we have, because we couldn't sell for 18 weeks, is that our storage tanks are full. And whilst we have some capacity to crush and to make wine, if the ban is extended beyond 15 February, our biggest worry is that we will not be able to bring in all those grapes, which you can just think will mean huge losses, huge job losses on farm levels. And when we talk job losses on farm level, we know by now that one job creator has got about 6 dependents. So it's a huge socio-economic ripple effect that we have going here. So we are really worried. We are losing 300 million rand per week if we can't sell domestically. And obviously, if we need to write down stock, that goes into the billions. So it's really a severe situation.
All right. Thank you very much, Rico. We'll leave it there. That was Managing Director of Vinpro, Rico Basson.